Right, so gold has been under pressure this week. So this being Monday, so this was Friday, we moved up, and then Monday was an inside day. So um, a few things could have happened. We could have continued sideways, we could have broken out to the upside, but we've broken out to the downside. So the initial balance Monday and Tuesday was widened to the downside, and we haven't come back. We've essentially broken out of this consolidation. We've come up to test the lows or thereabouts, not quite. We've left behind an imbalance between here and here. So a break above 1917 to target, let's draw that in as well. A couple of bucks above. This kind of acts as resistance, guarding 1930. Meanwhile, however, we are on the backside of this bearish trend. This is the 4-hour chart. Sliding to the front side, sorry, we're on the front side of that bearish trend, and we're sliding to the back side of that prior bearish trend, and we're sort of respecting it as a counter trend line, this green dashed line. So it's a bit of a mixed picture, really. The market is sort of building these stairs, and we're coming up to retest between these highs, so 19, 10, 20, and then this area here, 19, 13. So this too is acting as resistance, acting around the trend line. So this is the 4-hour chart. We made a new low for the month, low of the week and low of the month. And the question now is whether we move up from here or continue lower. The stairs effect looks like this for a continuation lower. So we're coming up for a 61.8, a 61.8 retracement, and then a 78.6. A break of the 78.6 would likely bring 1920 resistance into picture and could start to erode the bearish outlook. But if this were to hold at resistance and stay below the trend line, then the path of least resistance from there on would likely be to the downside. And in that respect, measuring the range, the prior range, the breakout could target all the way down into this trend line, counter trend line support in a 100% expansion. So this is essentially an expansion tool, and that could be the target down there, breaking 1900. Now, the data has been better this week out of the US compared to last so far. So that could be weighing on gold, considering the focus is on US data and markets are starting to price in a second rate hike from the Fed this year, which is also fueling a bid in the US dollar. So we've got jobless claims and PCE data this week, and then we've got the jobs data next Friday, which will be key for gold and the US dollar. All three data points.